this energy transition is not about demonizing hydrocarbon. It is a realization that as much as we try to move on to renewables, there will be a long transition period, and that the cost to stop investing in supply will only create much higher energy prices in the coming years. And I think the coal market is a perfect example. Demand's falling, but prices are record high because the underinvestment in supply has been even larger. And I think it's a warning sign for other hydrocarbons like oil. When you look at drilling activity globally, it really hasn't recovered much since its collapse last year. We're now in this entrenched deficit and demand continues to recover. You can see how we're facing potential multi-year deficits and the risk of significantly higher prices. So that's the key of the energy transition, is to really realize that, you know, hydrocarbons like coal, gas, and oil are not your past sources of energy. They're really your transitions to an environment where we rely on renewable and storage, but we're not there yet at scale. And so we need that investment.
And Damien, earlier on, to Mandy's question, you said that there's a possibility of oil going to $100. Your own target year end is $90. But what about prices staying at elevated levels? Because, I was just reading a report on CNBC.com where our own colleague stateside, Jim Cramer, spoke to a chartist talking about how, it would essentially be a technical move running on borrowed time. And so sustaining, this wouldn't be a structural problem and would correct itself sooner rather than later. Your sense?
Yeah, so we think the fundamentals warrant higher oil prices. Our forecast for the next several years is $85 Brent. And we have a good observation already. If you look at the last 6 months with Brent around $75, we haven't seen a supply response. Now, demand is rebounding further, and we need to really start to see that investment. Now, let's go back to the genesis of that lack of supply response. First and foremost, it's an oil sector that for 5 years prior to COVID hit, destroyed investors' capital, right? Investors are not interested in investing in this space that has allocated capital so poorly over the past several years. You can see it in shale, right? Shale is short cycle in technology that holds today, but the rig count is not going up materially because producers are focused first on returning cash to shareholders. And only after that can they consider ramping up. That was not their framework before. So that's the key of the sustainability of higher prices. Oil demand will set new record highs next year and the year after that. And we just need to see a ramp up in investment. That 75 was not sufficient. So I think the fundamentals actually very much support the view of higher prices than we've seen pretty much since 2014.